Hey guys, Waves here, 24th of October 2018, and we're just approaching 2:15 BST. Right, so thought I'd do an update on Bitcoin today. So it's been a while, and that's mainly because Bitcoin's done not a lot, to be honest, not a lot at all. So yeah, but I feel like we're due an update because there's a very popular question on Twitter right now that a lot of people are asking me, and that's whether or not I am long Bitcoin because the upper median line of this pitchfork that I've drawn has been broken. So I will certainly address that question in this video, and I'll go into it in depth just so we get a better understanding about pitchforks, how they are meant to be used. But the short answer to the question is no, I'm not long Bitcoin at all. That's the short answer, but I will go into that in a lot more detail. First of all, a little bit of an explanation about what you can see before you for anyone who's new to my channel. So I've got essentially a W, X, Y pattern playing out here. This is how I expect the correction of Bitcoin to occur. So far we've seen W, which was a three-legged pattern down. Then we saw X, which, as I've explained many times, is a descending triangle. So let's quickly just draw that out so it's clear. So this is our base of the triangle. And then our descending trend line can be shown as follows. Okay, so this is our descending line, this is our base. This is A, this is B, this is C, this is D, and this is E. Now, a lot of people will say, hang on, what's going on here? B wave didn't touch the bottom of the triangle. Well, I'm afraid not every triangle is going to be a textbook example of a triangle. The criteria for a triangle is that each side of the triangle, the top and the bottom, needs to get a hit at least twice, and that's exactly what we've had with this setup here. We've had it hit here, here, and here on the top. And on the bottom it's hit here and here. So the criteria has been met for the triangle. And as I've mentioned in previous videos, we've seen the same kind of pattern play out in 2014. Why is that significant? Because it's important for determining the Y wave, because the Y wave in 2014 was a 0.382 extension of wave W. So that means this final wave, which is wave Y, which we project from where X finished, if we do a fib extension, so fib extension of wave W, extend that from where wave X finished, and we find that the 0.382 extension is at this level, 3200. So this is where my preliminary target is for the Y wave to finish. So 3200, and as you can see, I've drawn this demand order block here. I'll explain how that's been drawn out, because I've been talking about that in Twitter, but I've not really made a video on it, so I'll just quickly run over that as well. So this, you can see a few price tags here. They've marked out these blocks, the top and the bottom of the blocks, to show where I'm really looking for support and resistance levels. As I say, my main target is this 3200 mark, and I expect a bit of a confluence with the this descending median line of the pitchfork. And just to explain, a pitchfork is essentially drawn when you have your first two waves in of an Elliott wave count. I like to draw it so your first pivot is at the beginning of the Elliott wave count, at the end of your first wave, and then at the end of the second wave. So they're your three pivots, and then you get these lines drawn out for you. So in this case, this is a shift pitchfork, and you can tell from where the origin of the median line is. Okay, I'm not going to go into that too much. I'm going to create a tutorial on pitchforks where I'll elaborate on that. But this is a shift pitchfork, and it's important to note that we're on the log time scale also, because you can see if we come off the log scale, it completely distorts our pitchfork. So it depends on the scale. So it's important to stick with the same scale when you're using these indicators. Now, Okay, so this demand order block, essentially an order block is where you see consolidation in price before a large price movement. So here you can see price retraced, and there was consolidation in this area before price eventually went up. So basically the orders that were made, the long orders, so betting on price going up, were made around this area here, and that allowed for price eventually to break out. So this was our accumulation phase here, and generally I like to go off the closing price of these blocks. So if we can see the candle close, so we're on the daily chart right here, you can see the closes are here, and there's a close here as well. So I basically mark out the block based on these closes. Now if we go on the weekly, you can also argue there are some interesting closes on the weekly. Look at this level here. This is very significant. This is at 3600, and it's quite significant also because it's at probably the halfway point of this order block, and the halfway point, it represents the point at which supply and demand have kind of come to a deadlock. Yeah, so it often acts as a good resistance or support level in itself. So that's at 3600 level, could be significant also, especially considering these weekly open here, weekly open and close here, and then weekly open here. Sorry, weekly close, weekly open and close, and then weekly open. So yeah, that 3600 is certainly a significant level also. Alright, so this is my essentially daily demand order block that I've drawn out. And there's a small one here, which just basically shows us why we found a bit of resistance at this level. There was this consolidation here also, and you can see, if we zoom in a little bit, you can see that this order block acted as support here. The top of it acted as support here, and going across acted as support again and again. Yeah, so these order blocks are significant, and we look at it based on the last bit of the contrary trend. So this is a downtrend, so what we look at is the last time it was bullish, which was here, and then we want to find a consolidation area below where price has not yet reached. So this is the last bit of bullish consolidation prior to the part where price has not yet reached. Yeah, so this is this range. Once this breaks, we're then looking to approach the next consolidation area, which I've marked out as this bit here, but in fact we could probably just reduce that and say it's this bit here. Yeah, this block here is very significant. I did say my target was 3200, but this 3600 is very interesting also. So, all right, so that's just some of my preliminary targets. Now, let's go into this and explain what my thoughts are on Bitcoin breaking this downward upper median line here. So we basically need to zoom in here, and we can see it's just about broken, and that becomes a lot more apparent if we go on the 15-minute chart, for example. Here you go, here's the downward sloping line, nice clean break. It's been above it for some time now. I think we've got a close on the 4 hourly at least. We will probably even get a close on the daily. Now, is that significant? So that's what the main learning point I want to make from this video. And what I want you to be aware of is really that pitchforks are guidelines, all right? They're not buy and sell signals. They get broken all the time. We see wicks above them, we see closes above them. They are guidelines that help you with your fundamental bias. So I've said for a long time now that I believe Bitcoin is trending downwards. That's my fundamental opinion. Yeah, I think it's always important to have a fundamental opinion. I'm not saying I know Bitcoin is going down, but to me that makes sense. Why? Because we've seen such a marked move up. It was a really exponential, extrapolated move up to 20,000, and I don't feel we've seen a reasonable correction to justify that really strong move up. I really don't. As I say in previous videos, Bitcoin has always retraced to the 78.6 retracement after doing these exponential moves up. It's not unusual for Bitcoin to make these big moves up. It's done it again and again, and it's just doing it again this time. So I'm leaning to the bearish side, certainly. And so yeah, fundamentally I'm bearish, and so I'm going off these downward trend lines to try and determine if Bitcoin is still trending down. Now, when something breaks the upper or lower warning line, that is when you can say the trend has been broken. Now, for me, I've been going off this upper median line. Why? Because if price were to break that, it would really ruin the Elliott wave count. I mean, if price came up to this upper warning line, it would be difficult to come up with an Elliott wave count that would justify it coming down further. So I do really want to see this line hold quite well. That said, it can certainly go above it. And I'm going to give you a few examples now, because I don't just follow Bitcoin. You can see I've got all these tickers saved on the right side of what I generally follow. Let's just have a look at NASDAQ. Okay, so here's I draw the pitchfork so we can see what's going on. It gives me that I'm not going to buy and sell every time one of the lines gets hit. What I do is it helps me determine, are we trending in the same direction or not, or is the trend breaking? So this is the NASDAQ from post-recession here, 2009. So this is what I've got drawn out. This was the first two major waves up and down, so then I started my pitchfork from here. And you can see generally these lines are being respected quite nicely. Now, you can see they get broken. So let's zoom in here. Very clear breaks of this line, just like we've seen in Bitcoin, a break of that upper median line. We're seeing breaks of these pitchfork lines here. Now, does that mean that you should get bearish every time it breaks this line? No, it doesn't. It just means that it's probably not the best time to get in. You don't want to be going long when we're on this side of the line. Yeah, you want to wait for it to come back above and then go long. Yeah, you can see here, went back above, retested the line, went above. Okay, so same applies with Bitcoin. Let's zoom out on this one. So yeah, on Bitcoin, yeah, we are slightly outside of the line. Does that mean I'm long? No, because I told you I'm fundamentally bearish. Yeah, so just because this pitchfork has been broken, no, it does not mean I'm now long. That's not how I use these pitchforks. They tell me if trend is being respected. Right now, we're on the wrong side of the trend. Fair enough. It just means that I'm not trading right now. That's what it means. You know, I would have been short below here. Now I'm going to be a bit more cautious. I'm going to wait for price to come back below. This is what I'm expecting. I'm expecting price to come back below this upper median line. When it does, then I'll be looking for an Elliott wave setup to get in. So these pitchforks, they're not to be used as buy and sell signals by themselves. They give you a general idea of whether we're trending or not. And certainly they can get broken, just as moving averages get broken also. Just because it gets broken, it doesn't mean it's been invalidated. It can certainly spike above, because there's a lot more things into trading than pitchforks. We've got Elliott wave, we've got order blocks, we've got order blocks on your horizontal levels, there's catalysts, and there's all sorts of things at play, lots of different indicators. So certainly it's not as easy as to say that as soon as it hits one line you go short, and then if it hits the other line you go long. It doesn't work like that. What I do, I always look for a confluence of indicators. So say for example, we're getting close to this upper median line. I'll look for an Elliott wave setup to get in. However, I want it to be on my side of the line first of all. So I want price to come down first. I want it to be on this side of the line. Then I will look for an Elliott wave setup. Let me just give you an example. So I've got pitchforks on all of these charts. Oil is what I traded yesterday. Now let me show you the bigger picture in oil. First of all, my fundamental bias in oil is I'm bearish. Okay, why am I bearish? Just generally speaking, I mean, I've not done market research or anything, but I believe that oil has completed a correction wave on the charts, but also there's just a lot of reason to be bearish on oil. I mean, we're relying a lot more on renewable sources of energy now. We're trying to crack down on pollution. The advent of electric cars is becoming more and more of a trending theme. So what I see here is a wave up, a correction, that's a running flat, and then another wave up. And let's look at the Elliott wave or the Fibonacci relationship. So that's the first wave, then we've got A, B, C, final wave. So it's a 1.618 extension. Perfect, to the point. Yeah. So that's one thing there. And then if we look at this whole move down, this is corrected just over 0.618, I believe. Yeah, so here's our 0.618 level. It's gone just very slightly above it. Yeah, so a lot of reason to suggest that a correction has been completed. Now don't get me wrong, oil could go higher, but either way I expect the bears to be very strong at this level. Okay. Also, when following oil, it's useful to follow Brent crude, which is UK oil rather than US oil. Brent is a much better benchmark of oil price than WTI. So it's a better chart to go off. That's what I find anyway, and I believe that's the general consensus as well. But yeah, so basically I'm bearish on oil. So what did I do yesterday? So I was on the 15-minute chart, and I've got this new pitchfork for looking at oil. So basically I could see two waves in, so I just drew my pitchfork. In this case we're on the log scale, and we are using an original pitchfork. Yeah, so Andrew's pitchfork, and you can see these lines are getting respected very nicely. Lower median line, bit of resistance here at the median line, again resistance, and then we started to test the upper warning line, and I was seeing here it's been tested almost 3 times, and I think I was seeing it around this level, and then I was aware that we've got the EIA data reports coming out today, 3:30 BST. We had the API last night, so there's going to be a lot of volatility coming in. So I saw us, I'm fundamentally bearish. I saw us approaching this trend line. I can see that the pitchfork has been generally respected so far, and so I decided to go short. I looked for an Elliott wave setup. My stop was above this high here. Yeah, I was looking at this as a running flat, so an A, B, C. That's the way I was looking at it, and then I actually took profits here. Yeah, when it hit the median line, I took profits. Yeah, so they're also good for knowing when to, for trade management, essentially, knowing when to take profits. So, yeah, best case scenario would have been taking profits down here, but I was happy with, price had come down a long way and tested the median line. So essentially they're just guidelines, these pitchforks. Okay, so it's important to look for a confluence of pitchfork guidelines, Elliott wave, and order blocks. Okay, these are the key things that I'll look for in a trade. But you definitely need confluence. You can't just say, oh, it's close to a line, I'm gonna, if there was no Elliott wave set up here, I'd have been quite reluctant to go short. But I was certainly seeing this as a running flat right there. Okay, sorry, we're drifting away from Bitcoin here, so let's get back on Bitcoin. Just zooming out a little bit now. Another thing, sorry, just drifting away from Bitcoin again, we're going to look at Ethereum. So here's a pitchfork. This is even nicer than the Bitcoin pitchfork, to be honest. So I've got this as a WXY coming down to here, and So yeah, we've got our first couple of waves in. So one pivot, second pivot, third pivot, and we've got a shift pitchfork on the log scale, and we'll just see for yourself, see what you think of these lines. I mean, the low median line didn't hold perfectly, but it went through. Upper warning line, look at this. I think this is really nice to see. It shows me that smart money are looking at these kind of trends. Look how it doesn't go above. Yeah, it doesn't go above the upper warning line, and then it ranges between the upper median line and the upper warning line. And now again we're testing this upper median line, and we're still below it, by the way. If we zoom in, I think we are anyway. Let's zoom in on that. So we're at it. We're literally at it. So Bitcoin has actually broken through its pitchfork line, whilst Ethereum is currently at it. But I am expecting price to come down further in all cryptos. Okay, so just going back to Bitcoin, yeah, slight breakout. I don't think it's significant. I'm expecting price to come back in. Basically, I'm not trading, so that's my stance. I'm not trading Bitcoin. I'm waiting for it to come back. Then I'll start looking for bearish setups using Elliott wave order blocks, looking for confluence. I'll even look at pitchforks on lower time frames to help assist me with confluence and getting in. So yeah, this was the main message of the video, because a lot of people had asked me, am I long Bitcoin? Certainly not. So that's my answer to that one. What else can we mention? So yeah, the shorter term count. So as I say, I'm expecting Y to come down here. How's it going to play out? Well, I think this could be our first leg of the Y wave. Then we've seen some consolidation. Whether this is going to be a triangle, it's hard to say. An A, B, C, D, E. This E has come a bit too high for my liking. It's not really come higher than the B wave, I don't think, looking at that here. So it's not been invalidated, the triangle, but it's not such a regular setup. It could be more of a, this is our first leg down, and then we've got a correction, and this could be the start of our final leg down, with this being the first leg, and this has been a regular flat, so a 3, 3, and an impulse 5 wave up, probably a lot more easier to see on the short time frame. But essentially, if we just stick, you can see volume is quite faint on my chart here, but it's really low volume. Let's just go on the daily chart and you'll see, just in contrast to how volume used to be, look how low this volume is right down here. Yeah, so this dotted line, this horizontal dotted line at the bottom, look across to the left of the chart, it's really low compared to how volume was before. So any price movements right now are completely insignificant. Any spike in price to the upside or downside, as long as it's on low volume, means absolutely nothing. Volume is what validates price, and right now we've got low volume, so no price movement has been validated. We really need to see some volume come back in before we can say whether we've got any reasonable price action to go off. Yeah, so that's what I'm waiting for, guys. I'm waiting for price to come back below this pitchfork. I know a lot of you are asking me probably what would make me bullish Bitcoin. As I say, at the moment I'm fundamentally bearish. For me to change that opinion, I'd need to see volume come in, and I'd need to see quite aggressive price action going up. Certainly, if that happens soon, then fair enough, that would be significant. Otherwise, if we're just seeing consolidation, low volume, I would want to see this line broken, this upper warning line. That would certainly, any movement above that would significantly scare me if I was bearish. Yeah, any movement above that. I know that's a long way off, but yeah. So as I say, you go off volume, you go off price action. A wave count for a bullish setup, so I'd be looking at this being a possibly a WXYXZ, something like that. and then you can argue maybe this is some kind of impulse. It doesn't look impulsive to me. It looks very three-wave-ish, 1, 2, 3. But to be honest, it's not always clear. You could potentially argue I have looked at it on smaller time frames before. You can somehow argue that there's a small wave 1, 2, 3, 4, 5, and then you can argue this is a triangle A, B, C, D, E. It's very unusual to get a wave 2 triangle. That said, they can occur. It's not a rule that you can't get a triangle in a wave 2. So yeah, it could be a wave 1, 2, and a wave 3, and it would basically be creating what could be a cup and handle with a curved out bottom coming up to here, and you get your handle before price projects up. I don't think that's going to happen at all, so I'm not going to dwell on that, but that's the only way I could see it. And you can see there's so many faults to it. First of all, you've got a wave 2 triangle. This doesn't look impulsive, and it goes against the fact that Bitcoin has not really corrected the significant price move up to 20,000. So certainly fundamentally I'm bearish, but if we see some massive volume come in with correlating price action to the upside, then fair enough, I will reconsider. But until that happens, I'm certainly bearish. Alright, I'm not going to dwell too much. I hope I've made it clear about how pitchforks should be used. They are just guidelines, and as I say, I use them everywhere. So we can see, look how the Nasdaq currently, it's quite interesting at the moment. We're trying to determine whether we're going to head into a recession, and I'm certainly looking out for the onset of a recession. Reason being, if we just go on the weekly chart a moment, we're 10 years into an expansion phase of this economic cycle, which is, it's almost record breaking. I think it's probably the second longest expansion phase we've had to date. So we're very overdue, and I'm counting 5 waves up on multiple time frames. Even on this from 2009 here, I've got a 5-wave count up to here. So I'm really looking for a breakdown, but I want to see these. What I'm looking for to confirm a recession essentially is these lines to get broken. So these uptrending lines. So right now we're testing this lower median line. I would want to see the low and warning line. When that breaks, there's no doubt that this is it's going to be a recession. Just adding on a few moving averages, you can see right now we're testing the 50-week moving average. There's been 2 big spikes in price off this level, which tells you we're in a it's not very clear whether this is just a simple correction and we're going to head higher, or is it just temporarily correcting to the upside before it drops down further. It's very unclear, and because of that lack of clarity, I feel that that's why we've got a stalemate in a lot of markets, including Bitcoin. I think Bitcoin is waiting for a decision to be made in the major markets to determine whether we're heading into recession or not. Let's look at silver. Silver's got a really nice pitchfork on it. Just take off these moving averages, so log charts, so silver all the way back since 2011. So again, this is a shift pitchfork. We're on the log scale. You can see here lower median line tested very nicely a couple of times, and we actually broke out of the upper warning line here. And as I say, these are guidelines, so you could get excited and start saying, we've broken the warning line, the downtrend is over, but we've come straight back in. Okay, that's why you need a confluence of indicators, not just pitchforks. So here, by all means, you might want to start looking for bullish setups because we're on the upside of this upper warning line. But if they're not really setting up, then you don't trade. Simple as that. And then it has come straight back down, and we're retesting it again. So we're at a very significant level. Look, we're right at this line, testing it now. Gold also, similar picture. If we go on our weekly. So on our log scale here on gold, you can see several breaks in the lower warning line here, but that wasn't a reason for price to go further. It just means that we've got to be cautious about what price action is doing. So here price went above the upper lower median line, but came straight back down again. So you got to use Elliott wave in combination. There is a big head and shoulders, an inverse head and shoulders. If we just depict that, so on gold, so left shoulder, head, alright, so we need to see this neckline broken for this head and shoulders to play out. Right now, gold is so at the moment it's testing this upper median line, and yeah, just as is the case with silver, it's at a very instrumental level, a pivotal level rather, in determining what's going to happen next. I mean, if price comes down below this level here, we've probably invalidated that inverse head and shoulders, and price will shoot down probably quite strong from here. That said, if we zoom in, if we go on the 4 hourly, so I'm looking at a potential 5 wave move down. So if that's a wave 1, okay, not the best fib extension level there. It's not, 2.618 didn't hold that well, but yeah, I was looking at it perhaps making 5 waves down, this just being a wave 4. You can see it's looking quite corrective at present. Okay, I remember now. So I did the count from here, 1, 2, 3, 4, 5. That's our correction. Okay, so if we start from here, 5 waves down, correction, and you can see 1.618. It wicked below, but generally held quite nicely. So if that's our wave 1, 2, it's a very shallow wave 2, mind you. I think it was only the 0.236 that got retraced to. And then now we are at, if this is a wave 3 down, it's retraced 50%. So if it comes any higher than this, then you've got to argue that it's a bit of a deep wave 4 and price is probably going to be coming up even higher. So this level really needs to hold, this 1240 level, if gold is going to continue coming down. So we're at really interesting points in the major stock indices in gold and silver in determining whether we're heading into a recession or not. Another excellent chart. Sorry, I'm throwing in everything here. You don't have to watch if you're not interested. We've spoken about Bitcoin probably as much as I'm going to in this video. So I'm just going to run through a few more things for you, for those that might be interested. So this is TNX. So this is basically our 10-year note. So it's your bond market essentially. It's the yields though, so it's inverse to the bond market. So the bond market since 1980 has just been skyrocketing. So the yields are inverse. It's just been collapsing. Now I feel this is a turnaround. Sorry, in 2016, July 2016, I believe this was a turnaround point here. I believe we are going to break out to the upside, but right now we're at this upper warning line. Okay, and you can see that it got really respected well here, this lower warning line, and so I expect this line to get respected, but I expect it just to be a bit of a pullback before it goes higher. I do expect this to come out to the upside. Alright, so probably making this video way too long now. This video wasn't meant to be just for Bitcoin, so just want to really show you a few of the charts so I can show you how I use pitchforks. Okay, yeah, so that's how I use them. I use them as guidelines. They basically tell me, are we still in keeping with the trend, my fundamental bias, and if not, then I won't trade it. If we are, then I will trade it, but I trade it using Elliott wave, order blocks. These are the general indicators that I'll be looking at. So right now, Bitcoin's on the wrong side of my pitchfork, so I'm waiting for it to come back in before I start looking for trades. So that's in it. It's in a nutshell. Now, yeah, I should mention, obviously, if you do want me to talk about other markets more, let me know. Basically, the reason I focus on Bitcoin is I get the opinion that that's what you guys are mainly interested in. So I've made other videos on, I think, gold and oil in the past, and it didn't really get the same response as Bitcoin. So for that reason, I've focused on Bitcoin. But if you want to hear more about alternative markets, let me know. I'm happy to do videos. As I say, I've analysed them. It just requires a bit of time to put a video together for you guys. I could look into that, but I need to know that there's demand out there. So put in a comment if you are interested. So just so I can get an idea of numbers, because I want to know if it's worth doing or not. All right, going to wrap it up there, guys. Yeah, let's see what happens. I expect something significant is going to happen very soon, but I've been saying that for a while now. So yeah, hopefully next few weeks. Let's see. All right, guys, take care.